Good morning, good afternoon, wherever you are in the world. I am Ross Burland, editor and analyst for FXStreet, and we are going to be looking at the Federal Reserve decision today, and I'm joined by Valeria, who is our chief analyst at FXStreet, to take us through this event. There aren't expectations of a rate hike, given that there is no press conference and it's way too soon since the last hike. The Fed are usually sort of on a course of they wait about a year before they act again. But this time around, I think the consensus more is on Trump. So Valeria, have you got any thoughts leading into this event?
Rose, how are you? Nice to be with you and everyone here. Hi, guys. And as you said, no big changes in monetary policy are expected today. To be honest, there is no chances that the Fed will rise rates or change anything. But I was checking a bit things before we started, and ever since Trump's victory, there are people counting how many times the Fed includes the word uncertain or uncertainty in the statement, right? So in the December meeting, in the December statement, we have 15 mentions to uncertainty. So in a way, the Fed is referring to Trump, right, without mentioning him. So from previous highs. So I do believe that the most we can see today or wait for today is to see whether the Fed is having a clearer picture than the one that they had in December, which seems unlikely, or if not, right? That will determine whether the statement will be understood as dovish or hawkish by the market, okay? So pretty much, I do believe that we are going to see a sending dovish statement with the Fed still not clear what to take amid upcoming policies from Mr. Trump, which we don't know.
Yeah, okay, so we're looking for something less hawkish then than December. I mean, my take on that is...
Okay, sorry. Now, I would say that mid-January, Yellen in a speech spoke about rate hikes, and she said, oh yeah, we are willing to rise rates a few times per year, and the market took that as extremely hawkish. Remember, mid-January was those comments, and the market rushed to price in 3 rate hikes per year, right? Because she said that they are targeting what they consider a neutral rate of 3% by 2019, right? But the fact is that I was checking a bit of history of the Fed, and back in 2014 and 2015, the Fed promised, sort of speaking, through their dot plot, 4 rate hikes for the upcoming years. And the truth was that they delivered just 1 in 2015 and just 1 in 2016. So right now, of course, we're not having a new dot plot today, but I'm not sure the market will believe or it's convinced the Fed will hike 3 times this year, right? We are waiting just for 2 rate hikes this year, 1 in June, 1 in December. In June, we will be past 100 days of Trump in the office, right? So maybe things become more clear then.
Yeah, I mean, if history is anything, we know that the Fed talk a very, very good game. It was, 2 years before they hiked in 2015 December. It was a whole year throughout 2016. We had the ebbs and flows of hawkish, dovish throughout that year, but it was still very much the consensus that, Yellen has this fixation on a 2% target for inflation, nothing above, nothing below. She wants it dead on 2%. And all the while that she is projecting that in a very positive tone, she was very positive in December for the US economy. It's that same rhetoric that they're going to be increasing rates. And I agree with you totally, Valeria. I don't think that we're going to see anything for the meantime.
Seems I lost connection for a second. Sorry, Ross. Wasn't hearing you properly.
Just very quickly, I'm with you, and I'm with. When you say the majority of the market, I don't know. I think the majority of the market was lured in last year into every word that Yellen says, that indicates that a rate hike is coming, and it's a flight to the dollar, and yields are on the rise. But I just wonder if markets are starting to lose a little bit of confidence, or a lot of confidence in central banks around the world, and how much or how little the markets this time around are going to start pricing in hawkishness into Yellen's forex.
That's a very good question, you know. I agree with you. I do believe that this year the world is rolling around the politicians rather than central banks. Political woes around the world will probably drop the market much more than central banks. As these days, central banks and politics dependent, you know. Pretty much that's what the Fed, Yellen did in their December meeting. They become Trump dependent from previous data dependent, right?
Yeah.
And I believe that's a situation we are going to see not just within the Fed and the US, but also in the rest of the world. Brexit in UK, elections within Europe, etc., etc.
Yeah, no, agreed. And what do you think that means then for the FX space? Are we looking for more volatility? Because my take on that would be, if the markets are losing less confidence to the banks, less confidence in what the central bankers are saying, markets are markets, right? So you know, the traders will go with whatever is said, but the momentum, I should imagine, will be a lot less. So you know, there could be for instance, sells and rallies in the dollar. What's your thoughts on that?
I have to disagree with you in the fact that I do see more volatility coming with this kind of things, you know. Just take a look at what happened this last few days, the first 10 days with our friend Trump in the office, right? We are seeing heaps of volatility across the board. I don't know, the market has spent the last 2 years rushing to price in the future, right? So pricing, and all of a sudden we have to trade the news again, right? We have to trade Trump. We have to trade his international trade policies. We have to trade his immigrant policies. We have to trade his down talk of the dollar. So that's giving much more volatility to the market these days. I don't know if the situation will extend, you know. I'm not sure if this will continue. Maybe after he draw all of his basis policies and start working on them, we will see a bit more stability and the market returning to trading in the future, sort of saying. But for now, we are trading news, political news, not macroeconomic news. Anyway, 1 minute to go. We have a bit of delay. Remember that, guys.
Say that again.
A minute to go. And
a minute to go.
Remember everyone that we have a bit of delay.
Yes. Yeah. No, I think we're agreeing with each other there, Valeria. I think you misinterpreted what I was saying. I think there's going to be more volatility and less length, if you like, on the tones that we're getting from the central banks. I think there's going to. That's what I meant by a sell on rallies in the dollar.
Okay, sorry.
No problem.
There we go. Let's see what charts means. Okay, a few seconds. It would be nice if the Fed cuts rates, rise rates. Any kind of
there.
Right, here we go. So we're seeing a bit of upside in euro here, straight off the bat. I can't see the decision.
I can't either. Okay, rates unchanged, 0.75% so far. Nothing new. I guess headlines from the statement.
Okay.
Okay, 0.50, 0.75. Headlines coming.
So it was unanimous.
Okay.
And we'll see. So inflation has increased in recent quarters, but it is still below its objective.
The committee will assess real economic conditions.
Jobs gains solid. Business sentiment has improved of late. This is stuff coming out from the statement.
The committee expects that economic conditions will evolve in a manner that will warrant only gradual increases in the federal funds rates.
Yeah. There's no mention here of Trump.
Not, and it was, in fact, correct me if I'm wrong, a short statement, not much added.
Yeah. Yeah. Yeah, this is pretty much a non-event.
Yeah.
Price action is very muted across the board. We've got the dollar yen still hanging in there at one handle. We've seen some pressures down to a low of 112.62 previously on the day.
The dollar is losing some ground, in fact, short term. Nothing really serious. But the meeting confirmed what the market was expecting, and that is Fed in wait and see mode until probably June.
Yeah, so this could be the status quo for some time. The next meeting then is in March. The Fed funds have been pricing in a 20% chance of an increase of 25 basis points.
Yeah, since we're going to get just 2 of those this year. Not much clues, in fact, over the future. No. And that's what the market was waiting for, and that's why we are seeing the dollar easing a bit. Gains. The dollar is weak. It has been losing ground ever since the week started. We see a bit of a dollar momentum earlier today, backed by strong ADP and manufacturing PMIs, but it was a short-lived movement. Seems so, as pretty much everything is reversing those dollars gains. The only one a bit weaker seems to be the euro, which stands around 750, back below the 800 highs we've seen earlier today. But that seems more due to confidence among stocks. Okay, we are having a pound getting
What do you think it's going to take for momentum to move back into long dollar again? We're going to need a very decent report, jobs report this Friday. The ADP report was pretty positive today, if that can be a prelude to Friday's event. But we've had a turnaround in this dollar, haven't we? Leading into this year, all the chips are on the table for a strong dollar, and once again, the market's been wrong-footed.
Yeah, well, employment has not been an issue for already 2 years, meaning the Fed bases its decisions in employment and inflation, right? And employment, despite the negative rating we have from November, not negative, but soft rating we have in the previous months, I don't believe it's an issue. Unemployment rate is at record lows. It's below the Fed's target. Inflation it's slowly growing toward the target, and it's pretty much close to the 2% the Fed likes. So I don't believe that at this point in the current global scenario, dollar strength depends on the Fed no longer. That's what I think. The dollar strength does not depend on the Fed these days. Of course, a surprise rate hike in March can push the greenback higher, but take a look at what we are seeing these days. The market will only turn back dollar bullish if Trump starts with those promised growth measures, right? Tax cuts, infrastructure investment, and if he boosts growth and inflation, then, well, yeah, probably we'll see the dollar turning back higher. But I can see that happening in the short term, this week, this month.
Yeah. All right, so we've got a little bit of time there to wait out for that. In respect to inflation then, so Yellen was predicting that actually CPI terms at this year will be up at close to the 2% at 1.9%.
Yeah.
So, I mean, if that's the case, I mean, you know, March could be a tactical rate hike, perhaps. You know, trying to get ahead of the curve.
Yeah, if we see strong inflation figures coming from the U.S. During this February and early March, then yeah, I do believe that there's a small chance that the Fed can act, but very, very small chance.
Valeria, if you are,
yes?
the inflationary pressures are going faster than expected in the last weeks. You know, with the eruption of Trump, the pressure has been like strong to the upside. So some experts are like saying that it will not be enough just to rises this year.
Yeah, I agree with you that's why I was saying there are little chances of a rate hike, very little chances of a rate hike in March, because as I said, I do believe that the Fed, it's Trump dependent, okay? It will depend more on whatever Trump says and does and wants, right? And one thing I was wondering, and I would love to discuss with you guys, is how long do you think Yellen will remain as the Fed's head under Trump?
Yeah, but you know that Trump, the president, has not the ability to remove the Federal Reserve chairman. He or she have to resign. It could be because the political tensions, but not because Trump will not say you are fired.
Trump can do it. He can do what he wants. He's a dictator.
But do you think he won't attempt to do that if he pleases?
Of course.
Yeah. And furthermore, he can make another executive order. Those kind of executive orders are really dangerous.
Yeah, but legally, the executive order cannot remove the Fed chairman. I mean, this is the one point.
Anyway, when and that's I'm not sure when Yellen period ends. To be honest, I should have looked for that before starting this live event. But I was thinking about that pretty much, very much these days ahead of this event. Because if the Fed really wants to raise rates, as Yellen said in the mid-January speech she gave in a university, I do believe it was, and Trump wants protectionist measures, right? He will need low rates, right? Easy money to boost growth in the country. So those two policies where
you would not serve out.
Sorry, there I was on something. I believe Yellen's term ends January 2018, Mauricio.
Okay, we have one full year of
2018. Okay,
yeah, next year. Next year. And Trump was previously saying, you know, he said, I'm a low interest rate guy.
And he said that he would like to replace Yellen once her terms end.
Oh, he said that, did he? Okay. Well, he can't.
He has to wait
until.
Sorry?
He has to wait 1 year. Who will decide who replaces Yellen? The government or the Fed itself?
It's like it's between the Fed and the Congress. It's not like the president.
Okay, we are going to have a very interesting January 2018 then.
Yeah.
Okay, taking a look at the market, stocks are quite flat after the release. Commodities are recovering some ground, but pretty much because the dollar is under pressure, I do believe that the market was hoping for a more hawkish statement. To be honest, something that went along with the January wording of Yellen, and we didn't get that. We didn't get anything, to be honest. But the dollar's decline has been moderate. Not much action going on across the board. But for the pound, which extended up to a fresh daily high, and there it is, holding near fresh highs.
Well, actually,
I think throughout certainly the next 6 months of this year. If Yellen was really confident about the U.S. economy, she would have already risen interest rates by a lot more than she has already. If we cast our minds back to Alan Greenspan after 9/11 and the dot-com crash, he slashed interest rates. He was so pessimistic that he slashed interest rates from about 3.5% down to 1%. And Yellen's doing these little incremental yearly rate rises because the truth of the matter is I think she knows full well that the US economy is not as rosy as the Fed are having to make out. And now with Trump that's in, I just wonder if indeed the Fed are going to start taking a more dovish and bearish tone on the US economy, which could play in the hands for Trump because ideally he wants a weaker greenback anyway. He's already started to voice his concerns about currency manipulation by the Chinese and Japanese, and his protectionist policies are likely going to need a weaker dollar. What do we think on that?
I do agree
assumption?
With you. Yeah, I do agree with you, but I don't know. You said the economy may not be so rosy, and I do agree with you. But it's at least for what we get from macroeconomic data, it's the economy that's doing the best, or the best performer economy these days across the world, right? And take a look at what happened with the PMIs, or what we just talk about inflation or unemployment levels. They are showing good data, supportive data, growth data in the US, maybe not at the pace the economy grew, I don't know, 10 years ago, right? But anyway, the data is supportive. It's telling us that the U.S. growing. It's telling us that the U.S. economy it's
improving.
Sort of,
it's improving and it's in a better position than other major economies.
Yeah, exactly. That's what I'm trying to say.
Right. Yeah.
But remember that when Greenspan was working with Clinton and Bush first and second, they were working together. Like at the Fed with the government. After that, it was Ben Bernanke working together with Obama, then Yellen working together with Obama too. So now, I don't expect any more major divergence between Trump and Yellen. Maybe Yellen will come closer to Trump's policies, and if Trump wants to push down the dollar, Yellen will do this. It will work in the same way, I guess. The Fed is independent, but historically they have been working together with the government.
Yes, historically they have. Yes, but is it time to get rid of the Federal Reserve altogether?
Yeah, and well, maybe the next year. That's why Trump will try to take out Yellen or to fire Yellen. So
historically, there has never been a U.S. president like this one in every single aspect you may consider, right?
Yeah, absolutely.
He has no political background. He's an entrepreneur, but he's a showman. I don't know. There's so many differences. So many characteristics of Mr. Trump that make him so different to one would thought of an American president, that
one thing that stands out to me straight away is in comparison to all politicians, he is actually fulfilling his promises that he made to the electorate, but by the orders that he's already activated. He's put in that policy of the ban to those 7 countries and so on. He's sticking to his word, and that's pretty extraordinary.
He didn't ban Saudi Arabia or Yemen, sorry.
No,
countries. He didn't ban the countries where terrorists actually are coming to the U.S. The countries where terrorists actually are coming to the U.S. because he's making business with those countries. He can't fight Saudi Arabia.
Well, America are making business with those countries. My take on it is it's all about the US dollar. If Saudi Arabia, and I don't know how many billions they have treasuries. I'm sure it's a lot still. And you know, in retaliation, the last thing that the U.S. economy needs is a movement away from the petrodollar. I mean, that would completely put a flaw in Trump's you know, pro-business plans for his term of 4 years. That would be a catastrophe for the U.S.
That's exactly. That's why I at the ban.
Okay, go, Valeria. I think we lost Valeria. So let me make a clarification, Ross, from before about who elect the president of the chairman. It's the president, the president of the government who elect the chairman, but he have to elect the chairman from the board. I mean, you know, from the board of the Fed. So he have to select to take a pick from the board. You know what I mean?
Yeah, gotcha.
Okay. So we were talking about the policies of Trump. You say that Trump is fulfilling all his promises, and that's fine. Yeah, you know, but mostly it's more the polemical ones, like the wall with Mexico or the ban on some Muslim countries. But the only big economic decision have been with the TTP, the Trans-Pacific Agreement, and also kind of the pipeline, but mostly the decision that can affect the economy is the TTP, and now there's regulation with banks and then, but you know, how can that affect the real economy in the United States for a short term, in the short term? Because that decision will affect the United States in the long term, but not in the short term. So now he will get all that policies that has been Obama developing and Janet Yellen developing in the last year, and he will take this is fine or this is not fine, but the United States is working well now. So he have to make cases on I'm moving as a government, but maybe he's not that moving a lot in the economy.
Well, at the moment, no. These things will take a long time and many hoops to jump through and approval.
Yeah, but my point is that Donald Trump has to move in whatever way to show people that he's moving.
Yeah.
And any improvement in the economy or any good data in the economy, in employment, on inflation, on the stocks, will be because him. You know, it's like a propaganda.
Absolutely. No, I totally agree with you. And it's just interesting to see what priorities that he's taking up currently. And, you know, it did seem very pro-business. And we saw that market reaction. We saw, you know, an encouragement in the stocks. The stocks were rallying, and we broke that 20,000 milestone, or whether it's the breaking point in the Dow Jones, for instance. But what we're starting to see now is a situation where Trump is losing a lot of confidence in fact, in some of his own electorate. You know, not because of what he's doing, but the way in which he's doing it. I mean, for instance, this ban to those several countries, I think it was 7 in total, correct?
Yes.
You know, it's off the cuff. You know, there was no strategy to that. And he backed that up by saying, well, look, you know, this is something that Obama had already put into place. We're simply doing checks and balances, and it will only last for 90 days, I believe it was, or is. Well, that's all very well. But Trump needs to understand, although he is the president, he's still, there is, you know, a method in which he needs to stick to, you know, and that is something that's concerning. And if he is this flamboyant in other geopolitical scenarios, that could really, you know, stir up situation and be very problematic.
Yeah,
and that is very concerning. So he really needs to take a couple of steps backward. He needs to get this team around him. He needs to collaborate with them. He needs to make sure what is legal and what is not legal, and what he is able to actually do as president before taking up his. I mean, what he's done here is it's a colossal thing, and it's really upset the world. So
it's like, do you remember that Gainer press conference like 8 years ago when he was talking about China and China's proposal on the basket of currencies to replace the dollar, and he said, okay, we are considering that, we're thinking about that. But he was not real considering, just listening the Chinese people, and then the global stocks were going just like a collapse. It was like disappearing a lot of money in real time.
Yeah,
and that's why how Gainer used to learn how to deal with market, and that will happen.
Absolutely.
That will probably happen. Will happen with Donald Trump.
And this is where people have said, critics would say he hasn't got the experience, and so he's flown into this position, and he's walking around like he owns the world, and he'll say things. And what he's going to be very careful about is that he can only say something with clarity that he intends to carry out, and almost kind of putting something out there and then backtracking once he receives the criticism. I mean, that is not the way that the U.S. economy is country.
Yeah. Okay. So let's move back to the Forex. So Valeria is back with us. So Valeria and Ross, what are the trades to do now? What are the pairs to follow now? What is the stronger currency and the weakest? And what are the opportunities? Where the opportunities the opportunities are right now?
Well, no doubt dollars is the weaker. That's an easy call. And stronger, I'm not seeing much strength, honestly, anywhere, but amazingly for myself, the pound seems to be stronger at the moment, right? Yeah. Pressure in January highs and about to, I do believe that if we take that 26.69 we closed last week, here has room to go up to 27.17, which was December high. I see some strength there. And when it comes to the euro dollar, it has a wall bigger than the one that Trump wants to build, in between 800 and 840. Take a look at your weekly or bigger time frames. You will see that the clear bottom around between 800 and 840 for most of 2015 and 2016, right? Most of those years, the price held above the 800, 840 area. And additionally, if you take a look at the fever retracement I have placed in the daily chart, the 50% retracement of the November-January slide stands around 820, right? So it's a major region which won't be easy to break, okay? So I'm not happily buying the euro unless the pair can take that region, in which case I do expect a rally towards 930 or so, which is the next Fibonacci resistance. And another thing I'm looking right now is the dollar Japanese yen, because it seems that the pair is getting ready to fall. I believe that if we take back the 13 level, we are going to see some interesting moves. Right now, the pair fell a few pips below that level as initial reaction to the Fed and quickly bounced. But if we lost this low, then there's room for further.
Valeria, what's your take on the New Zealand dollar?
I think we lost Valeria again.
Okay. So I'm looking at the Kiwi. I think it's an interesting currency at the moment. Fundamentally, as a country, it's performing very well. It's kind of isolated away from the sort of the geopolitical tensions around the world that we're feeling on the Eurozone, Eurasia, Asia, the United States, of course, and all this populism risks that we have with the European elections coming up. The Australian dollar is more correlated to some of those risks, but the New Zealand dollar, I think, it's up to a key resistance level. looking on the daily chart here, going back to September of here, we've got a high here, if I can get this to...
Yeah, in 74.
Sorry?
Yeah, in 0.74.
Yeah.
I see.
75 is a very key target on that. So we're currently, we're meeting a resistance, a descending resistance line, but everything is stacking up for a continuation. It's popped its head above that line, with next target obviously being 73.60, and a break there. We're sort of clear lines all the way through to 74 and onwards. But on the other side of things, obviously, we need to be looking at the Dixie. And if we see some more momentum back into there, targeting through 100, 101, 102, that obviously would put the brakes on that trade. But that's an interesting one. So we might have a pullback, and if we can hold 72.20, I think there's a bullish case there to buy dips and take that higher again. So I'm looking at that one. That's my personal take on the Kiwi, and then I agree with what Valeria was saying there on the majors. I think with the yen, obviously with plenty of uncertainty coming up, if you're not just in it in the market trading spot, futures and options give you many instruments and methods in which to play that. And I think the yen, there's a good case for further upside in the yen. And that would be something to look for as well. A break of 112 would be very significant. 112.
I remember that in the panel that you did like a month ago, well, no, like 2 weeks ago, Ross, and they were talking about the VIX. About how wild will the VIX be?
Well, the volatility. Yeah. It's a measure of essentially, risk in the markets. And when you're looking at this stocks, I mean, that's basically where it's measured, in the equities market. There is a case here for a very volatile period ahead. So there are many ways to go about getting long of the VIX, and a quick Google search will bring up some of those ideas, and for anyone that's interested in trading volatility. But yes, it's a market that's it's quite hard to pick out the levels and so on. So you'll have plenty of losses along the way, but when volatility really picks up, so will the VIX, and that's something to keep in mind. And it can also be used as a hedge.
Yeah. Okay, I think we lost Valeria definitely.
Yeah.
So we can. Well, do you have any statement, any final words to after the Federal Reserve decision, what we can expect now, for the dollar and from the government and from the Federal Reserve, how that will affect the dollar? What is the most probably scenario in the upcoming days? What is your take?
Well, it's very difficult to jump on a trade and expect to be able to just ride it all the way to glory. We are in volatile times. There are many headwinds, a lot of risks this year, far more than we've seen in the last few years of trade. You've got the EU elections coming up, the first one in March, I believe the 15th for the Dutch.
Hi guys, really sorry. My internet is being a pain in the lower back today. Sorry, not sure what's going on. Yeah, I have technicians, they changed everything last week, and here we are still struggling with this third world connection. Sorry for that. I apologize.
Welcome back. So Marissa was just asking me that, what should we be looking at for here, and what are the trades? And I'm saying it's way too difficult to predict anything. Coming into 2017, all the hype was about getting long of the dollar and dollar-denominated assets and equities, and look where they are today. Things are changing on a day-to-day basis. But I think we're going to find a bit more consistency as the markets and Trump gets used to his position, and so does the entire world and markets. We'll be looking for, particular traits that come with Trump's presidency that we could run with. We've got plenty of risks ahead, such as the Dutch elections that take place in March, I believe, March the 15th.
Yeah.
And there seems to be, some movement towards, another upset in that scenario, populism, and that could be very detrimental to risk appetite. And then on the other hand, and I'll stick with it, I'm afraid to say I am a bear on the US economy. Yes, we're seeing some improvements, but when you get behind and dig really deep, what are those improvements? And if we look at the jobs market, I'm sorry, but I'm still seeing part-time jobs everywhere. And I'm still seeing people coming out of retirement and going back to flipping hamburgers, if you like.
Yeah.
But Trump has said that he wants to sort all of that out. So let's see if he can. But there are some warnings about being too protectionist, and they can also be detrimental to the economy and to the jobs market. And then in terms of I just don't trust anything that Yellen has to say, I'm afraid, and I haven't done for quite some time. I think last year I giving up really reading her statements. It's only a matter of good practice to do so. But I'm seeing the same thing, and I think this year is going to be a bearish one for the US economy. So I'm putting my stakes on that.
I agree with you. It's a time for adjustment, time for new policies, and time to see how those policies are going to work. I do agree with you. Protectionism is not the best measure, the best choice America can do these days. And well, it's what Trump has offered and promised. So here we go. So let's see how that works out and how it affects the local economy, and if it can actually move people away from flopping burgers, as you said.
Yeah. Look at that. Sorry, this is Spicer. This is the press, the Secretary of Press of the White House. Spicer says that Nachin, Andres Nachin, is the new Treasury pick from Trump, that he can address currency values when he's confirmed. So maybe they are expecting to manipulate or address, well, in quotation marks, they are expecting to address currency values in the upcoming months and days. It's interesting to know that.
Yes, and Trump's already been quite vocal over that. Yeah.
Yeah. Yeah, sorry, Valeria, I interrupt you. We lost Valeria again. Okay, so I think we can wrap up the coverage, right, Ross?
Yeah, fantastic. Yeah. So, just in summary, really, then, we've seen a choppy reaction in the dollar to the FOMC release, and I think we're going to see more of that to come. The Fed kept their rates then unchanged between 0.5% and 0.75% as expected. And I think really now we need to start concentrating on Friday's event, which will be non-farm payrolls for the next catalyst. And as a prelude to that, we had a decent ADP number today. We had decent manufacturing and jobs within that background. So we can expect to see, a steady non-farm payroll, which should underpin some stability at least to the dollar. But obviously keeping, eyes and ears to the ground on anything that Trump has to say and developments from here on. And the next interesting thing is, what is his next move?
Okay, just the last question. I saw a question here in the chat. Do you have any take on the gold? What is your approach?
On the pound?
On gold.
On gold. Yeah, yes and no. I have to say that I was wrong last year on gold and the dollar. And of course, you know, many would say that gold is a natural hedge against inflation. So the question is whether we're actually seeing any of that, and how much more we might see throughout this year. Gold is obviously going to be a play in a risk-off scenario to be long of, and you know, measuring against intermarket plays such as the Dixie, it's negatively correlated to the US dollar. But in terms of levels, we've had gold testing now the 20 DMA, which is just below the 2000 mark there. So that's a very significant play. Sorry, 1,200. That's a very significant level. It's managed to creep up from the lows of last December, and it's a very bullish, strong momentum trade there, but it has been struggling at these sorts of levels. So I'm going to see a bit of consolidation, I think, from here, going by the daily chart. So I don't think we're going to see a huge movement one way or the other. And obviously, gold is highly correlated to fundamentals. So it's really a play on the US economy right now, before attention starts switching to the EU and political risks. And we're not far away from that. So over the next few weeks, there's going to be maybe some shift away from Trump, more towards the EU. But again, what is going to be very critical in all of that is what is Trump's relationship going to be with the EU? Because we've already started to see Trump being quite vocal against sort of the bureaucracy of that setup and that project. So that could be a bullish scenario for gold.
Okay, thank you, Rosa and Valeria. You just arrived, so we are talking about gold. Do you have any take on gold?
Yeah, I do believe that we are going to see a bit more gains, but not much. Gold is benefiting right now because for most of the past year, gold has been Fed dependent and coming under pressure in hopes the Fed will raise rates. Now that Fed rates hikes are diminished, then there's a good chance that gold will advance farther. We have those highs around 2020 and the stronger static resistance around 31, 32. So I can see the gold moving up to those levels during the upcoming days. To be honest, I don't expect huge gains in gold prices. Not that we're going to go about 1,500 or so, but indeed I am short-term bullish in the commodity, particularly because it's managing to hold around above the 1,200 figure.
Okay, we lost Valeria again, I think. Okay, Ross.
Okay.
Okay, thank you very much for coming today. It has been a pleasure.
Yeah, great. Anytime. Thank you.
Okay, and thank you, Valeria, also. She's not here, but thank you. And see you next time. See you in the next coverage, on the next panel, and the next outstanding interview that you will do with us. Okay?
Okay.
Bye-bye.
All right then. Good man. See you soon.
See you soon.
Ciao, ciao.
Ciao. Thank you, guys. Enjoy the rest of your day. Trade safely. Bye-bye.